past few weeks, I have had some interesting and rewarding opportunities. I've been in Washington, D.C., and I had a chance to meet in small group meetings with all 5 of the governing board members of the Federal Reserve, including Chairman Bernanke. And just recently, I was in Tacoma, and I had an opportunity to meet with Treasury Secretary Geithner and 11 other community bank presidents. The topics of these meetings have been focused on small businesses. And that's not a surprise, because the U.S. economic engine is dependent upon small businesses, both their production of goods, their hiring of employees, and they are what's going to lead us out of this recession. And community banks factor into this discussion quite prominently, because they provide over 50% of loans $100,000 or less to small businesses. I had an opportunity to speak one-on-one with Chairman Bernanke, and in those discussions we talked about the local economy as well as lending trends. Eastern Washington and Oregon continue to fare much better than most parts of the country, and Baker Boyer has been able to continue to support our clients. Our new loan volume is up. However, our renewed loan volume has declined a little because our clients are being conservative and reducing their borrowings given this tough economy. Secretary Geithner opened up the meeting with the community bank presidents with 2 questions. First, he asked, "How are small businesses faring in your communities?" Then he said, Tell me about the demand for loans from individuals and small businesses as well." When it was my turn to speak, I handed Secretary Treasurer Geithner a copy of 2 telegrams from 1933 during the Great Depression. The first was the official declaration on March 6th of 1933 that President Roosevelt had declared a bank holiday and that all banks were ordered to close their doors. The second was a request the very next day to issue Baker Boyer bank notes. It was a practice which was allowed before the Fed was established. I told the Treasury Secretary that I was so grateful not to have received a notice like that to close the bank in either 2008 or 2009. And I told him, had I received it, I would have been tempted to keep our doors open anyway, because we have been so strong through this financial crisis. He actually chuckled. I think he got a real kick out of the notices and the telegrams. But it set the stage for my comments, which was about the importance of community banks, particularly during times of financial stress. The administration has been trying to provide support to small businesses through the SBA programs, that's Small Business Association lending programs. And I mentioned that while added benefits that they've added to these programs are good, that the barriers to a community bank's use of SBA lending has more to do with their very difficult, time-consuming processes and much less to do with any particular benefits. So I really encouraged him to work to streamline the processes so that we could provide more efficiently and effectively SBA guaranteed loans. The second area I focused on was new regulations to protect consumers from predatory lending practices. I encouraged him to allow the regulators time to digest the legislation, because if laws are enacted too quickly or carelessly, even regulators can't keep up, which in turn provides poor guidance to banks. I also encouraged him to focus on the non-bank lenders, which have had very loose regulations prior to this crisis. Regulatory resources should be focused on giving them more guidance. I have been so grateful for the opportunity to be just a small voice in a process that is providing the greatest amount of regulatory reform to our industry since the Great Depression, and also to provide information about the local economic health of Eastern Washington and Eastern Oregon.